Hi, my name is Ravi. Welcome to my channel Payment Talks. Welcome back everyone. We have covered the basics and foundations of ISO 20022 in our previous videos. It is time that we start with ISO 20022 document messages. The first message that we are going to start is Pay No One. Why Pay No One and why not any other message? To understand this, let us rewind to this picture. I hope you all remember and understand this picture and its elements very well by now. If not, I strongly suggest to go through the previous videos to understand each element in this picture thoroughly. Please understand why I am stressing so much on this concept. Imagine you watch a movie without understanding the characters like who is hero, who is villain, and who are supporting actors. Similarly, the agents and parties shown here are the actors of the payment journey. Without understanding these actors, you cannot understand the movie of payments. Now, let us understand what is Pay No One message in ISO 20022. Pay No One Customer Credit Transfer Initiation is an ISO 20022 message used by a customer, typically a corporate or institution, to instruct its bank to make one or more credit transfers. In simple words, Pay No One is a digital payment instruction file sent by a customer to a bank. Pay No One initiates the payment process inside the bank. Pay No One does not move money by itself. Pay No One is always customer facing, never interbank. Let us understand the business rationale for this message. The core business problem for corporates is that they need to pay employees, pay suppliers, make treasury payments, and all this they need to do in bulk, securely, and automatically. Before Pay No One, every bank had its own format. Corporates had to build multiple integrations with various systems. Data quality was poor, reconciliation was manual. Then ISO 20022 came up with Pay No One. Pay No One solves these pain points by providing a single global format, structured data instead of free text, rich compliance and remittance information, support for bulk and complex scenarios. Pay No One is used for many use cases like salary payments, supplier payments, vendor settlements, intercompany transfers, cross-border payments, marketplace payouts, treasury payments. Mainly, Pay No One supports single payment, bulk payments, multiple currencies, domestic and cross-border payments. We will discuss the bulk and other concepts in next videos. In this video, we focus mainly on the initiation scenarios of Pay No One. Pay No One is a message that starts the payment journey. And that is why we start our ISO document messages journey with Pay No One. Coming back to this picture, here elements highlighted in red are actors that get involved after the payment journey got initiated. So let us keep them aside for now. Pay No One is often introduced as the ISO 20022 Customer Credit Transfer Initiation message. While technically correct, that description hides what makes Pay No One truly powerful. Pay No One is not just about sending money. It is about clearly expressing authority, responsibility, and intent in a structured way. ISO 20022 deliberately separates who is allowed to initiate a payment, whose account is debited, who is the economic owner of the payment, who may simply forward the instruction. This separation gives rise to distinct Pay No One initiation scenarios. Understanding the answers to these questions in a payment journey is critical in constructing the payment message that is further processed. Once Pay No One reaches to debtor agent, the debtor agent then processes this payment further as Paxo 8. Pay No One journey ends at debtor agent. Before moving to flows, we need to understand the roles of these elements, which is foundational. All pay no one scenarios use the same role model defined by ISO 20022. Everything that follows depends on understanding these roles correctly. As said at the start of the video, we have covered these roles in detail in previous videos. We will just recall the definitions of them again here. Please note, from now on, we shall use the terminology party for non-financial institutions and agent or bank for financial institutions. Initiating party is the party that creates, authorizes and takes responsibility for the instruction. Debtor is the party whose account is debited. Debtor account is the account from which funds are taken. This is the first sight of funds or money in the payment journey which are placed at debtor agent. That means until payment reaches debtor agent, the money is not moved. Which means pay no one journey does not move the funds until it reaches debtor agent. The debtor agent is the bank serving the debtor's account. Ultimate debtor is the party for whom the payment is economically made. And finally, forwarding agent is a financial institution that only forwards the message without any change. This is not a business role in the payment journey. ISO does not assume these roles must belong to the same legal entity. That assumption is where most misunderstandings happen. Initiation, forwarding and execution are separate responsibilities and must never be mixed. One simple rule that clears 80% of the confusion is to understand those 4 questions which we mentioned just now. Every pay no one initiation flow is just a different combination of answers to this. Here is a quick single view of all the initiation flows that we are going to discuss one by one. The first scenario is the debtor initiated scenario. What is this scenario? This is the simplest and most intuitive model. The party who sends the instruction is the same party whose money is used. The initiation can be via ISO message over networks or direct channels like for corporates, or via various modes directly using bank provided retail channels like net banking or mobile banking, etc., where bank converts the initiation into pay no one format. Very important here is initiating party is the debtor whose money in their account with the debtor agent is used for the payment. Let us look at a simple practical example. A trading company uploads a pay no one file to its bank to pay suppliers or to pay salaries. The same company owns the account being debited. This can be a single or bulk payment scenario. The scenario is depicted simply here. Now let us do the role mapping. Initiating party is the trading company as it is initiating this payment. Whose account is debited? It is a trading company's account. So this makes trading company as debtor also. In this scenario, trading company's bank is bank A, so it becomes debtor agent. From debtor agent, intra-bank scenario where the beneficiary is also in bank A or PAX 8 journey starts. In this scenario, there is no other actor involved, which means no ultimate debtor or no forwarding agent will be populated in the pay in one message. This scenario exists because most payments are still straightforward and ISO never tries to complicate what doesn't need complication. The next scenario is authorized initiation scenario. This is the most commonly misunderstood and most practically important scenario. What is this scenario? A non-financial, non-account owning party initiates a payment based on legal authority. This party may not be a bank, is not a forwarding agent, and it has formal authority, that is mandate or power of attorney to initiate the payment for debtor. Here initiating party is not debtor and initiating party has debit authority over debtor's account. Let us look at an example. A small business authorizes its accounting firm to initiate payments. The accounting firm creates and submits Pay No One to the bank where business has its account. The funds are taken from the business's account. This scenario is clearly depicted here. Now let us do the role mapping. The accounting firm here is the actually initiating the Pay No One. So this becomes the initiating party. From whose account are the funds taken? It is business's account with bank A. So this account is the debtor account, and this account belongs to small business. This business will become the debtor. As the account is held with bank A will become the debtor agent. You see, Pay No One starts and flows from accounting firm to bank A. This is not forwarding. So forwarding agent is not applicable here. As small business is the owner of the debit account, ultimate debtor is also not applicable here. Debit authorization is a prerequisite for this scenario. Debtor provides debit authorization to bank A, which allows initiating party to initiate a payment from their account. Sometimes this agreement between three entities, the debtor, debtor agent and initiating party, is called as the tripartite agreement. There is another concept in authorized initiation scenarios, that is sweep contracts. What are these? Sweep contracts are a treasury and cash management concept. The sweep contract is an agreement between a customer and a bank that allows the bank to automatically move funds between accounts based on predefined rules at specific times or thresholds. In simple terms, if balance is too high or too low, move money automatically. This is extremely common in corporate cash management. Important point in this scenario is that banks often validate authority agreements or tripartite agreements behind the scenes for this model, even though ISO messages don't show contracts. This type of scenario exists because the party allowed to request a payment is not always the account owner, and ISO supports this. The next scenario is relay scenario. Relay is often talked about and just as often misused. What is this scenario? A financial institution forwards a Pay No One that is already initiated without changing or authorizing it. Let us look at an example. A trading company operates in multiple geographies with multiple bank accounts in each geography. For example, take a company situated in Dubai and has operations in all GCC countries like Oman, Qatar, Saudi, Bahrain, etc. Its headquarters in Dubai has connectivity with a global bank in Dubai having AED account, but it has other GCC currency accounts in GCC countries locally. Now this company wants to pay its suppliers in Saudi using its SAR currency account in Saudi. It will initiate a Pay No One from Dubai corporate office to its global bank in Dubai. This bank is expected not to change anything in this Pay No One and only route this Pay No One to the local bank in Saudi. The funds are paid from SAR local account to suppliers by the local bank. Let us do the role mapping. Who initiated the Pay No One? It is a company, so it is initiating party. Which account is debited? It is a SAR account of the company, so this is the debtor account. As this account belongs to the company, it is also debtor. The account is with local bank, so local bank becomes debtor agent. Then what is global bank in this scenario? As we mentioned, the global bank just routes the Pay No One to local bank without tinkering with the Pay No One. It is called as the forwarding agent in this scenario. Ultimate debtor is not applicable here. A forwarding agent is a financial institution that forwards a message on behalf of another party without initiating, authorizing, or altering the business content. The forwarding agent does not initiate the payment, does not own the funds, does not decide the payment, does not change the payment details, acts like a secure carrier. Think of it as I am just delivering the payment order to the bank that will execute it. Key ISO rule is forwarding agent must be a financial institution. That's why the pay no one sent from forwarding agent to debtor agent is called interbank pay no one. This scenario exists because the initiator cannot always reach the debtor bank directly, and ISO must support reach without transferring responsibility. Relay is a transport, not initiation. Relay solves connectivity, not authority. The next scenario is POBO, payments on behalf of. This is the most business rich scenario. What this scenario is: one entity pays using its own money but for the benefit of another entity. This is where ultimate debtor becomes essential. Initiating party equals debtor and ultimate debtor is not debtor. Let us look at an example. A parent company pays a supplier using its own account for the work done by a subsidiary of it. Let us do the role mapping. Who initiated the payment? Parent company. So it is initiating party. Which account is debited? Parent company's account in bank A. So this parent company account is debtor account. Parent company becomes debtor and then bank A becomes debtor agent. But who is the actually benefiting with this transaction? It is subsidiary who is supposed to pay the suppliers. So this subsidiary is the ultimate debtor. Pay in one started at initiating party, that is parent company, and ended at its bank, that is debtor agent. No forwarding happened, so forwarding agent is not applicable here. A simple analogy to understand this even better. Imagine you pay your child's school fees using your bank account, but school records as paid by parent on behalf of child. That's POBO. Why ultimate debtor is critical? It explains economic ownership, audit responsibility, regulatory and tax interpretation. Without ultimate debtor, POBO payments look like unexplained third-party payments. These are the 4 practical scenarios in which pay no one can be initiated. If someone can clearly explain all 4 scenarios with role mappings, they don't just understand pay no one, they understand how modern payment ecosystems are designed to work without ambiguity and or risk. If you are working on channels or business, understanding these flows is a must. Let us look at a hypothetical scenario to conclude our understanding. This scenario may not be practical, but understanding this will allow you to understand pay in one initiation distinctions clearly and make you master of real world payment behavior. Let us look at the flow. Pay no one always starts from initiating party. In pay no one, this initiating party is mandatory to be mentioned. If any bank passes a pay no one to another bank, it is most likely that bank acts as forwarding agent, and this pay no one that is passed is called interbank pay no one. If there is no passing of pay no one, then forwarding agent is not applicable. That's why this is optional field. Debtor and debtor account will tell us who is giving funds and from which account. These are mandatory fields in ISO. The bank which holds debtor account or bank which processes this pay in one into PAX message is the debtor agent. Debtor agent is mandatory in almost all payment messages. And in a scenario where payment is made for some party who is not financially connected to the payment but is the actual owner of the payment, then they are the ultimate debtor. This is optional field. Pane 1 initiation scenarios exist because authority, money, connectivity, and economic ownership do not always sit with the same party. Authority based initiation separates permission from ownership. Relay separates connectivity from responsibility. POBO separates economic ownership from execution. Once these distinctions are clear, Pane01 stops being just an XML message and becomes a precise model of real world payment behavior. With this, we come to the end of the first video of Pane01 video series. In the next video, we will deep dive into Pane01 structure and how Pane01 can be used for a single and bulk payments. We will also cover the comparison with MT101. Until then, keep learning. Thanks for watching this video. If you like this video, please like, subscribe and share for more such interesting topics on payments.